Imagine spending $120,000 fixing up a rental property and then using it to wipe out thousands from your tax bill. Sound too good to be true? It's not. It's the power of real estate professional status, one of the biggest tax loopholes the IRS allows for real estate investors. Hey everyone, my name is James, and I help property investors just like you build portfolios packed with high cash flow properties. In this video, I'm breaking it all down with my own real story, how I spent 6 months in 25 gutting and remodeling one of my rentals almost entirely by myself, how that helped me qualify as a real estate professional, the massive tax benefits I unlocked, and the time tracking tool I used. I also did a DSCR cash out refi at the end of the remodel to pay for all the expenses. And yes, the property is still positively cash flowing. If you are a real estate investor, tired of paying huge taxes on your W-2 job or business income, stick around. This could change everything for you. Hit the like button if you're ready to save big. Subscribe for more tax smart real estate tips. Let's dive in. Let me take you back a few years. My wife and I bought several rental properties back in early 2000. Our strategy was to purchase single-family homes in small college towns across the Midwest. One property we bought, we still have today. 21 years later, it has been a steady earner with very little vacancy. To be honest, I was an absent landlord with this property, and we really didn't upgrade the property since we bought it. We had a local property manager that was one of the better property managers we have used. We investigated into selling the property, and after running the numbers, decided against it. What with realtor fees, depreciation recapture tax, long-term capital gains tax, net investment income tax, and state capital gains tax, it just didn't make any sense. Another option would be to sell the property under a like exchange 1031. I'll cover like exchange that we did on one of our other properties in another video. This place needed everything. New kitchen, bathroom, flooring, electrical, roof, sewer line, foundation repairs, the works. Total remodel costs came in at just over $120,000. But here's the key. I didn't hire a big crew. I did most of the work myself. Over 6 months, I was there almost every day, demolishing walls, repairing lath and plaster, installing drywall, tiling, painting, you name it. Weekends gone. I logged over 1,500 hours swinging a hammer, managing contractors for the stuff I couldn't do, sourcing materials, and overseeing the whole project. Why go through all the sweat equity? 2 reasons. 1, it saved me a ton of labor costs. 2, and this is the game changer, all those hours counted towards qualifying me as a real estate professional with the IRS. By the end, the property looked amazing, rented out fast at top dollar. But the real win? The taxes. Keep watching because this is where it gets exciting. What exactly is a real estate professional status? Normally, rental properties are considered passive by the IRS. That means any losses, like from depreciation or expenses, can only offset passive income, not your regular job salary. Excess losses just sit there, carried forward. But if you qualify as a real estate professional, your rentals become non-passive. You can use those losses to offset any income, W-2, business, whatever, unlimited deductions. In my case, that $120,000 remodel, a big chunk of that qualified for accelerated depreciation through cost segregation and bonus depreciation, creating huge paper losses on top of real expenses. So how did I qualify? You need to pass 2 tests every year. The first is the 750-hour test. Spend more than 750 hours on real estate trades or businesses where you materially participate. Things like construction, remodeling, management, leasing. It all counts. Investor stuff, like just reviewing statements, not so much. In my remodel, these 6 months of hands-on work easily pushed me over the 750 hours. Demo, framing, plumbing runs. I tracked every hour in a detailed log. Dates, tasks, time spent. Use apps or spreadsheets. The IRS loves proof. Check out packrent.io if you're looking for a time tracking tool for rep qualification and to calculate your mileage and expenses. Link in the description below. The second is the 50% test. More than half your time, total work time in all jobs must be in real estate. If you have a full-time job, this is tough, but possible if real estate dominates your time. In my case, the intense remodel period made real estate over 50% of my work hours that year. You also need to materially participate in the rentals, usually 500 plus hours per activity, or aggregate them all within an election. No license required, just the hours and the involvement. If married, filing jointly, only one spouse needs to qualify for the whole return to benefit. Now the payoff. With rep status, it turned massive remodel costs into deductions through cost segregation, breaking down the property into shorter life assets, and bonus depreciation, which is back at 100% permanent for qualifying improvements in 2025 and beyond. I generated thousands in first-year depreciation losses alone. These losses offset our ordinary income potential, potentially saving me 50 to 100,000 in taxes, depending on my tax bracket, obviously. No passive loss limits, avoided 3.8 net investment income tax on rentals. Future rental losses, same deal. Deduct against anything. This isn't free money. You need real losses from expenses, depreciation. But for active investors like you, it's huge. My 120K remodel didn't just upgrade the property, it supercharged my tax savings. Quick warning, rep is an audit magnet. Document everything contemporaneously, not after the fact. The IRS is tightening rules in 2025 on hours and activities. Don't try this without a good CPA. Rules are complex and eligibility is yearly. If you have a demanding job, it might not work. But if you're hands-on like I was with this remodel, it can be life-changing. If you're looking for an online tool to track your time mileage, consider packrent.io. You can try it out for free, link in the description below. The user dashboard has a good overview of your rep qualification hours. It also supports personal mileage given your start and destination location and calculates your personal mileage expense. You can see on my dashboard, I logged over 17,000 hours on this project in 2025, more than enough to qualify for rep status. My personal mileage totaled 395 trips, total mileage over 12,000 miles, which calculated to about $9,000 in expenses. It's quick and easy to add your time to any activity. On the left-hand menu, select the time entry and then select task hours. You can view your time entries in several ways. The default is list view. You can also view entries in weekly or daily calendar. In this example, I'm viewing the weekly calendar. I can select any entry in the calendar and edit that entry. There you have it. How one grueling 6-month remodel unlocked real estate professional qualification and massive tax savings for me. If this fired you up, drop a comment. Have you tried to qualify for rep status? How did you record your time for rep status? Don't forget to check out packrent.io for time tracking. Curious about how the remodel turned out? Check out the video above for the final reveal. Remember, deals don't find you, you find them. Thanks for watching. See you in the next video.